What's up, everybody? Welcome back to Stats to Assets. I know I've been gone for a little bit, but we're back. We're back in action. Today's really cool talk. We are talking about financial literacy. I'm going to introduce my guest here in a second, but this is going to be the first of many different series that we're going to be talking about financial literacy and stuff that we didn't learn in high school, college, stuff that we should know as adults and families should know right now to just secure wealth, build wealth, and protect yourself and your family. Okay. All right. So today I have a special guest, man. One of my closest friends, Natalie Novosel. She is dope altogether. So she played in the WNBA, and you'll have to introduce yourself because I might botch it, but played in the WNBA. How many years, Nat?
I just played one.
Played one, but played overseas as well, multiple years. Graduate of Notre Dame, baller. But most interesting, she's retired now and kind of on her most awesome career now as a financial strategist. So she's been helping families, helping people, understand more about financial literacy, understand what to do with their money, how to protect themselves, their family, their kids, and really some of those things that the wealthy do with their money and sharing that knowledge. So Nat, thanks for being on the show. Welcome.
Absolutely. Appreciate you. Thanks, Ernie, for letting me be on the show with you. Obviously, I appreciate you for hosting it and trying to better athletes, current and also former as well, and just all everything in between. It's obviously a necessary need, and it was something that I'm super passionate about as well, because I wasn't exactly set up for my career post basketball or even prepared for my injuries, right? So just any type of preparation and more knowledge. And typically when people have more knowledge, the better they do. And that's really just kind of about bringing that private knowledge and bringing it out to the public, bringing it out to the masses, because they deserve the same access to the same knowledge.
Well, let's start. We're going to cater today's talk to athletes. And sure. I want to broaden athletes. So, professional athletes here in the States, professional if you're let's say American American, but you're playing overseas at all different levels, right? You're a person that moves your body and you get paid to move your body. So I'm going to also include personal trainers, yoga instructors, dance instructors. So if you instruct and you use your body, you're an athlete, man. This is for you, What do you think about that, Nat?
Yeah, absolutely. I think it's mostly most people, specifically when they're young, and I genuinely thought this exact same way too. And a lot of athletes, I would say too, and of course to the people that you mentioned as well, is kind of feeling that in feeling of invincibility. I'm young, I'm powerful, I'm the strongest I've been, I'm in my prime. Nothing's really going to go wrong, right? And until it does. And typically people look at and need like insurance and things like that 5 minutes after it's too late almost. And so it's almost like we equate it to a parachute. You need if something's wrong in your parachute, you're already on the way down, right? There's nothing that you can do at that point. And so sometimes it's just about protecting people, giving people the knowledge, and them, again, like I said, having access to it for them to be able to move forward and have it. But it's just about having the foundation to be able to have something in place if something does go wrong, right? For me personally, I ended up tearing 3 ACLs, 3 reconstructions, right? Out basically 12. Yeah, it's you exactly the same way, Ernie. Out 12 to 18 months, couldn't play, couldn't work. How do I pay my bills? How do I pay my rent? How do you continue to work, make money, bring in and maintain your lifestyle, right? And so it's just about some proper, just some things that can be in place for you to protect not only your livelihood, but protect your money, right? We protect so many different things in our life. We protect our phones, we protect our cars, our houses, but do we protect our money? Do we protect our lives, right? Or actually ourselves, right? And so many people neglect that that's even an option, or they just are uneducated about the options that are out there.
And let me know what you think about this too, because I feel like if I was in college, especially an athlete right now with NIL, we're not going to go deep into NIL because I'm not a expert on that, but just the fact that these athletes can make money, right? Way more than we could, and in college, still salty about it, but they should be this is a conversation that they need to be hearing and thinking about as well, I believe. What about you?
Certainly, it's specifically like, especially younger athletes, the what I've learned in my field, people just never get into a habit of saving money, mostly because they don't really understand the value of saving money. And especially when they're young, a little bit can go a really long way. So obviously, as younger players, they're starting to make some money, especially in like NIL and things like that. And obviously, yeah, we could definitely be salty, but at the same time, it's good for them. I'm glad somebody's getting the bag, right? And so it's not like, okay, all the money that you're getting, let's just go and invest it, right? It's not very exciting. They don't understand the power of a little bit can go a long way. And that's why it's just like, what if we took a little portion of it? A little portion of it, what they have on their side is time, right? And so a lot of my experiences, I see a lot of people into their 30s, 40s, 50s, 60s who've never even saved anything, right? And by that time, they're starting to lose on the like eighth wonder of the world for a reason. It's called compound interest. They can't really utilize it, right? But when you're super young, a little bit can go a really, really long way to set you up almost for the rest of your life. And especially like having it in the right vehicles where it's safe, you can still access it, and making sure that, again, putting a little bit aside, building that habit. So when as you're starting to make more money, you're already in the habit of saving money, and you can continue to save more money. It makes more sense as you're making money to save more.
Perfect. Let's go over some definitions so people can start off on the same page with us about not financial literacy, but what is life insurance? Let's get people's mindset on the right level for what life insurance is and can do for you.
Yes, certainly. And I think, so I always equate it to, and just exactly how I used to think, most people's relationship with life insurance is they look at it as a cost, or they look at it as like death insurance, only going to get the benefit of it when I pass away, right? And so it's just not very exciting for a lot of people. I certainly wasn't very excited about it, especially if we're all sort of thinking that we're invincible. Probably aren't married, don't have dependents, right? Why would we need life insurance, right? And so they're thinking of like, what's like the least amount of coverage or least amount of cost for the most amount of coverage? Whereas the conversation we like to have with people is that probably people just aren't even aware of with life insurance. Sometimes it's upgrade to include living benefits. If something were to happen where somebody couldn't work, what if you could access the death benefit in your living years to help pay for medical costs, to help maintain your lifestyle, your bills, and if you couldn't work for like 5-6 months or something like that, right? But then on top of that, the conversation, like I said, that we want to have with people is, hey, once they understand the value of the question is that they ask us is, how much can I stuff into this thing? How much can I, now that they fully understand the value, you can use life insurance as a tool to continue to use to wealth build, use it in your lifetime, right? It's life insurance for a reason. The goal is to use it throughout your lifetime. And then, yes, you can obviously still pass on a legacy and things like that. But most people just are unaware of the vast options that are out there when it comes to different types of insurances.
Yeah, and that really makes sense because for me, I heard of life insurance and I was like, okay, I understand the basic gist of it is, hey, you need some life insurance for when you pass. And I think you're right. Most people have that mindset about it instead of understanding there's different vehicles of being able to have living benefits, right? And if you need to, if there's an emergency, you have living benefits and you have the death benefits with that vehicle. And this hits home for me because, when my mom passed, I'll be honest, she had in life insurance, but it was term, right? And it was there was no living benefits. So if we could have caught, cancer or her diagnosis earlier, we probably would have had those living benefits, a little bit of money to use from that, maybe to go find more, I would say, not better doctors, but have more choice of the doctors. Does that make sense? Like if you have the money, you can go find the doctors that you really want, right? Or you really need in the crunch time when somebody's sick, instead of just having the doctors that's available from maybe the medical insurance that's from your job. Right. Yeah.
Yeah, absolutely. Absolutely, Ernie. And you nailed that. It's just about having options, right? The few things in place can give people options, right? What if instead of having cancer and depending on your job's health insurance, like what if she had $200,000, $100,000, $200,000, $300,000 for her to be able to become more comfortable, maybe pay someone to help her
Yeah.
instead of being completely dependent, right, on care, or maybe she could have be more comfortable at home, right, and had a nurse and things like that. And so there's no requirement for reimbursement or receipts or what you're using it for. It's provided in the condition, right? Can you just imagine how different her life last few years could have been, last few months could have been, and how your impact in as her daughter had to watch that, right? How different.
Mm-hmm. Man, I agree. And I love that you brought up the reimbursement piece to insurance sometimes. So when I was there, we had to fly her from Austin to Houston, helicopter. And I was looking for a place to stay, right? And so at the time, we didn't have that much money just to shell out to hotels while we're staying there. And so what happened was with her type of insurance from, her job in school, they wanted reimbursements, right? You have to spend the money outright that you might not have for this emergency in this life crisis for a residence, for me to stay somewhere down there. And they would, that you get the reimbursement, you have to get the receipts and take care of all this stuff while you're going through this hard time in life to get your money back and actually get what you're kind of paying for with that type of insurance. And so, yeah, it was a lot. It was just a lot. It was frustrating. It didn't work. That kind of plan didn't work. And so I'm sharing my story because I want people to know, like, these things come out of nowhere. My mom was healthy all of my life. I've had more surgery than she had, up to, her days. And then it came out of nowhere. And we were for 4 months just trying to figure out the diagnosis and all that stuff. And so we really have to talk about this before, and not just this type of, worst case scenario, but you have to talk about these things with your family and spouses and stuff before it happens, and have to have a plan in place. And so what I've been learning with you, after being also licensed life insurance, person in the industry, is that I just learned a lot, and everything that you have taught me and that I'm continuing to learn. I'm like, I look back and I can see moments in my life where, especially with my mom passing, and like, man, I don't want anybody to have to go through that. I'm the only child. And so imagine only children, or if, it was 3 or 4 of us siblings and we didn't have mom anymore. It's a lot for the family to put on. And my idea is like having a plan to also make this hard time, this experience, less stressful as possible for family,
Mm-hmm. Yeah, certainly. Certainly.
All right.
And one last thing I'll mention too, that you actually said was like, what's important for you to notice, what I see often is most people understand the value of it when after they've been intimately connected to it, whether it be someone maybe like in your circle who's like just witnessed kind of what you and your mom had to go through, right? So it's just about helping educate people on the value sooner rather than later, right? Then the tides can turn where people can actually not necessarily get indebted to medical debt and something like that. So it's just like, because 1 in 4 people at the end in their life are going to deal with something catastrophic health-wise. And what's the number one cause of bankruptcies and is medical debt, right? And so it's like a little proper planning can go such a long way in to help about that.
Cool. Now I want you to help me kind of brainstorm some just life emergencies or things that you would need life insurance for or to protect from. Like, okay, there's sickness for yourself or a loved one that that happens out of nowhere. There's maybe becoming disabled and you can't work. What other things should people be thinking about to prepare for?
I think it's what I typically tell people is like making sure your foundation is correct. Most people's focus is just growing money and like trying to accumulate wealth, right? But when we think of like foundational things is making sure your protection is taken care of. Then it's making sure your debt, and then once your like foundation is set, right, then you can start to build wealth. But most people are trying to build wealth on a house of sand, right? And so it's crumbles
Mm,
to build any type of foundation of when it's sand like that, right? And
mm,
so it's making sure people have the correct protection in place to be able to then, hey, how's their debt looking? Like, obviously, don't get rid of, and not all debt is bad, but most people probably aren't educated on how to properly utilize debt to be able to build wealth, right? Whereas it's most people have bad spending habits, and so they can never really build wealth because of their bad spending habits. They're getting indebted to the credit cards, right? And if you're not, using credit cards appropriately or paying them off every month, right, and not really, like I said, taking advantage of the way they're supposed to be used,
mm-hmm,
right? So we're just continuing to get indebted to the banks, making the institutions more wealthy, and then therefore it's hard to build wealth. And in the America, we've got a spending problem, right? Like Americans are when it comes to saving money is negative 2%, right? So with that said, it's like you can't really build wealth if you don't have that foundation set. So just making sure that like that foundation is set so that you can continue to then once you're good to go, building wealth really seems simpler. But most people are like, hey, let me put my little $100 into something and you watch it go up or down the next day, right? It's like,
mm-hmm,
what if you have nothing else set, right? Like get everything set so then you can really build wealth and take advantage of that compound interest. But at the same time,
mm,
one thing I'll also say is most people focus on like, I got to get out of debt. I got to get out of debt.
yeah,
But I want to like pose the question of like, if you get out of debt, but you still have zero net worth, what if you could pay some of your debt down while building net worth, right? If you had typically people like, for example, if you have $1,000,000, but you have $100,000 net worth, but if you have $100,000 debt, you're not really as worried about the $100,000 of debt
mm-hmm.
comparatively, right? So it's like you can do both at the same time. To be able, but making sure, like I said, your foundation's set first.
Okay, cool. Really quick, can we talk about the importance of owning your insurance, right? From life insurance or medical insurance. And this is for, people that are in the corporate world or, athletes that are in the corporate world now and working for a company.
Right. Yeah. That's a really big one too, because most people think that the life insurance and the health insurance through their work is going to be the be all end all and they're protected, right? But typically when that happens, if something were to happen, it's really only 10, 1,500, something dollars. And most people's insurable need is a lot higher than what's offered through their work. And so it's a lot smaller actually that they actually that they have access to if something were to happen. And so most people's insurable need is a lot higher. It's based on, the financial industry basically takes into account how much someone's making, the debt they have, if they have kids, they want to provide for education and also their mortgage. And kind of that combination, it can start to really add up, right, if something were to happen. And so the goal is to have people insured so that if something did happen, their family or their loved ones are taken care of, yes, for the funeral, but on top of that, like to help the other spouse so that they didn't have to go into debt or weren't in like a big issue or in a bad way, right? Within a year or 3 years. With the people that are renting their life insurance, we like to say it's through their work. And so making sure you own your life insurance or at least own your money in that regard, right, is making sure that's protected. And so it's really important because most people just aren't aware of that, what the insurable need that they actually have in place.
Yeah, and one thing that really sticks out for me is people that are working in corporate is tech folks, or not even tech, but we've seen it a lot of layoffs in tech last year, this year, and there might be some down the road because I don't know, it is an election year and crazy stuff happens, right?
Sure.
Businesses. And so you really have to, at that point, you're not invisible. You might get laid off. So at that point, if you do get laid off, you no longer have your life insurance, your medical insurance for yourself, if you're just one person, or your whole family, if it's you, a spouse, 3, 4 kids, that's stressful. And so at that point, you are renting kind of your insurance. Somebody's put it that way to me, and I was like, oh, it hits home because you're renting it. It's right. Not your own, even if you were to encounter a layoff, like so many people have. Yeah. And, it takes so much time to get back hired. It's not that easy to get laid off and then find another job.
Right.
No matter where you are on the kind of like experience level for your role.
Right. Yeah, absolutely. Absolutely.
Yeah. Um, and then I want to talk about really quick, looking at my notes. Yeah, for the athletes, for people that travel the world, they're digital nomads, right? For the dance instructors and different people that instruct things and speak, and they travel the world, right? This is really, why is this important for them to be thinking about a certain type of life insurance that they own?
Yeah, absolutely. Because, with most of those types of people, the people that you're even talking about too, if they're not connected to a contract or a team,
Mm-hmm.
athletes, for example, but dancers and people who are probably a little bit more nomadic, they're probably not connected to in a work that has benefits essentially, and
Yeah.
so they're probably completely not insured in at all, right? And so a lot of people, especially in the dance community, I know they depend on their partner, and so if something were to happen, that's their livelihood. If someone gets hurt, not only are they going to be out and not be able to work, but on top of that, the partner probably as well is going to be either training with a new partner or also be out of work too. And so making sure even some things that are in place for them, again, it's probably along the lines of starting to build that emergency fund, starting to build wealth with that. And it's in a vehicle that they're still able to have access to it throughout their lifetime, but then also making sure that they're protected. And because like I said, most people are protecting so many things, but they're not protecting their income. They're not protecting their money, right? Or their life in and of itself in that regard. So especially when it comes to athletes, is we're so our bodies are not insured, right? Unless we do have a connection to a team or a contract. And even then, you may not get the best service depending on where you are in the world. And I know a lot of American athletes have horror stories of overseas and Europe
Yes.
of getting injured and not being taken care of or not, in a good spot. And so it's like just there are so many things out there that are available that, again, a little proper planning that can go a really long way to set you up so that worst case scenario, if something does happen, then you're going to be protected. You're going to be fine, and it's not going to be out and about where you're going to have to put a GoFundMe out there.
Mm-hmm. Listen, so I'm glad you brought it up about the athletes, and because we think, oh, everything's going to be great. We have a contract. They're insuring us for injuries, right? ACL tear. They're going to take care of it. But at the end of the day, sometimes you want your surgery to be, in the States just
Right.
because it's more comfortable for you. And sometimes, like you said, you've heard horror stories. Hey, our contracts come with insurance. Yeah, they're going to take care of everything. It's what the paper says.
Right.
But how many times does that actually happen when stuff hits the wall for you as a player? It's very hard. I don't know. It's very hard to get the insurance that you thought you were going to get, or get the benefits, not the benefits, but just the support that you thought you would have from that team.
Mm-hmm.
Yeah, I've had I don't know, what kind of stories have you heard without saying any names?
Yeah. Well, I mean, just even me personally, honestly, the end of my career happened because of a surgery that I had overseas. And so I had one that was done in the States where I actually tore it overseas in Australia. I came back to the States, got just happened to be my hometown, Lexington, Kentucky. Dr. Mary Lloyd Ireland was a world-renowned surgeon, Olympic surgeon, and she got my knee done. And I was good for 4 or 5 more years. Ended up tearing my other ACL in Australia at the time, and they had some great surgeries over there, but they didn't do a lot of the graft that I wanted. And so I didn't have any options because I didn't have health insurance in the States at the time. And so I ended up having my surgery over there. And then I rehabbed for 18 months, took a whole nother season off, was strong as could be, felt like I was good to go. A month before I was supposed to go, I had signed a 2-year contract to go back and play overseas. Retore it like it was nothing. Retore it like it was nothing. I was playing pickup one day.
Yeah.
And after that, I went back and had my last surgery with the same doctor, and she repaired it. But I know she told my mom, she said, yeah, if she were my daughter, I would encourage her not to go back and play. She's been in both of my knees, saw the inside, right, saw what was going on. And it was really hard to accept that, to not only end my career on an injury, but also an injury that was really out of my control, and I had done everything in my power. And so, like, we're talking about people's careers here that could be ended, right, with not having proper things in place. And so, for me and for you, why we're both so passionate about it is because we don't want to have what happened to us to happen to other people.
Yeah. Absolutely. And honestly, like, I was lucky enough to play 8 years, but with I'm 36, going to be 37 at the end of April, and how my body is and my joints are, I don't know, they feel like I'm way older. There's issues in my joints, and I wish I had enough income and things set up to where I could say, hey, it's okay if you play 5 years, right? Play 4 years, and then you give your body a rest and go into something else. But like if you don't make a lot of income as an athlete, or some of us, some don't make a lot, and then if you don't have other things in place like the protections or just understanding investments, right? If you don't have any other income, you're gonna make yourself play longer than you have to. Does that make sense?
Yeah.
Like I definitely played longer than I should have. Yeah. Just gonna say that.
That's right, Ernie. I know, and like, we can't even play like
Can't even play now. Like it's
friendly 3-on-3 tournament, that we got invited the other day. And it's like, you're right, and most people just don't have the options in place because, like, we do it a lot of, like, women's basketball is getting better when it comes to salaries and things like that, but it's not something that we can do physically forever, right? And so the goal is, if you love it, you try and continue to play, because, like, I don't know what else I'm going to do if you don't have anything else set up, right? But yeah, it can be challenging, and there are so many athletes that do maybe play a little bit too long, that do have to deal with things for the rest of their life.
Okay. Can you talk about just the process, or help people understand the mindset around having a lot of their money in banks? Like, what do banks actually do with our money, your money, their money?
Yeah, absolutely. So yeah, great question. And most people just aren't familiar with it. It's like the bank's not in the business of making us money, right?
Mm-hmm.
And most people obviously know that with how much, rate of return they're getting on their savings and checking account. But the banks are in the lending business, right? And so they're lending our own money back to us in the form of their credit cards, mortgages, personal loans, student loans, right? And getting profits for that. And they're legally allowed to do that. Fractional reserve lending, they're legally allowed to do that. And so they can legally, if they have, say, $1 billion, they can loan out 10 billion, right? And that's, like I said, legal that they can do that. And so they're not very safe. It's no wonder over 400 banks went under in 2008 when that happened, right? Probably because of the mortgage and crisis and that, right? Like, all the banks were intertwined with that. But who ended up having to bail the banks out? Taxpayers, right? And so what people don't realize what the banks also doing with 30 to 40% of their money, they're putting it with life insurance. And the banks aren't living entities, though, Ernie. Like, why do they need so much life insurance? When I say so much life insurance, I'm talking life insurance by the billions. Wells Fargo, 20 billion. Bank of America, $25 billion of life insurance. And it's because they basically get to classify it as tier 1 capital, which is basically a bank's financial strength. And it's kind of this combination of safety, stability, and strength, growth, essentially, that they get to use that for. And so it's typically like, if you would rather put your money in the banks, or would you rather put your money where the banks put their money? And obviously, right, so like, people don't realize you can do is circumvent the banks and go directly to the insurance companies, still have liquidity, still get high rates of return, growing your money tax-free, essentially. And it's like, if you had another potentially 2008 or recession or any kind of the economic climate happening right now, what would you rather put your money where, like, or be protected by the banks where 400 went under, or would you rather be protected where the banks put their money with insurance, and zero insurance companies basically went out of commission in 2008?
Wow. So did you say that if a bank has 1 million, so let's say 1 million, they can lend out 10 billion, 10 million?
10 million. Yep, exactly. Yep.
That don't make sense.
Make it make sense, right? So they're taking our profits, or we're funding the bank. Our money is just not sitting in a vault somewhere, like I genuinely thought it was when I
I
was
really did too. I'm like,
right.
so I,
Just
I can't
right,
show
of
up and be
course
like,
not.
give me all my money.
Getting all our
They
money.
no.
They don't have it. No, of course not. You lended it back to us, and so they're giving us point zero nothing on our money, but turning it 100 times profit for themselves. Right?
What?
They pay
What?
the best minds in the world to be able to say to, like, the banks right hire them, where do we put our money, right? And they're putting 30 to 40% of it into life insurance, right?
Okay.
So yeah, you're exactly right. They're legally allowed to do that. So if you know better, typically you do better. Instead of putting all your money with the banks and having it leverage that money for themselves, what if you could leverage that money for you to be able to
Mhm.
use it and make money moves throughout your lifetime?
Yeah. And continue with that because I think you're getting into like having your own family bank or personal bank, right?
Yeah, absolutely. So most people are maybe it's like trending a little bit. People are starting to catch on, but it's exactly right. So you're creating something that the wealthy have been using for generations, and you can utilize it throughout your lifetime. It's still getting market like returns. It's still able to grow tax free. You can access it tax free. The only way to grow large sums of money tax free is life insurance, right? And if you make more money, then you may not be able to have a Roth IRA, for example. There are income contributions. There are also limit contributions to Roth's IRAs and things like that. But what if you could put your money someplace where it was growing, tax advantaged, still getting market like returns, and able to still access it for an emergency, or you
Mm-hmm.
could access it for an opportunity, down payment on a home, down
Okay.
payment on a business or an investment, where you can start to build wealth that way. And that way you're able to leverage that dollar 2 or 3 times, depending on how you're funding it,
Mm-hmm.
essentially. And that's what most people just are unaware of that are even out there, is you can utilize life insurance as a tool rather than just thinking about it as most broke and skeptical people do, is they look at it as a cost, right?
Yeah.
Understandably too, like Ernie, like, people have no idea when it comes to term policies. Life insurance companies, they look at it like, oh, it's a scam, it doesn't pay out. Understandably so. Like, and that's talks to what you said earlier about renting your life insurance, even too, is like most people have temporary life insurance where only 2% ever pays out in life insurance, right? Term policy, essentially. So what if you could own your life insurance, have a permanent policy, utilize it as a tool throughout your entire life, turn it into a tax-free retirement income stream if you wanted to, and then still, if you whenever you did pass away, did pass on a legacy.
Gotcha. And then there's one point I wanted to make when we were
Sure.
talking about before I forget, talking about the costs of burial, right? And I'll ask you like if you know like the average cost to bury someone, because I know for me, burying my mother was, man, it was about 15,000 just for the whole process of getting her body just from Houston to Austin, right? To the um what's the place? That kind of embalms the body. I'm losing my train of thought.
I'm
But
not sure either.
yeah, so getting to the people that will embalm the body and prepare it for open casket, that's what we did.
Just the funeral
And
home. Yeah.
the funeral homes, can't even
Oh,
think. Yeah. So getting the body there, having them do their work, but then also like for me, I didn't have, and me and my mom didn't talk about, hey, where's the policy number and all that, because I don't know, we just didn't plan, right? This is
sure.
the things you have to tell somebody probably in the family, that you have the policies. This is where they are when something happens. But what happened for me is she did have a policy, I didn't know the number, but the funeral homes are able to, use probably social security numbers and find that. And so I was able to pay it through the funeral home, and they charged it. Um, but then there was also a payment to have her buried at the cemetery, right? It was like $5,000 for her spot and all that. So for a very minimal kind of funeral, it was 20K.
Yeah.
Like, and I know a lot of families don't have 20K sitting around if they're not insured. And so this is when you're talking about multiple people passing in a family, you don't want these things to continue to pop up every few years. So it's really, really important for people in your family to be protected.
Mm-hmm.
Yep. Does that make sense? man.
No, absolutely, Ernie, and we see it a lot. Actually, everybody has seen it. Most people, when someone passes away, what comes up within 24 to 48 hours is a GoFundMe,
Mm,
right?
yeah,
And in our experience, it's about 10 to 15,000
yeah,
to is what we kind of prepare for people. And a GoFundMe is not a solution for burial, right? And it is on the person that does pass away, right? And so not only have they left, it's not their fault, but like the emotional burden that people have to, mourn them. But on top of that, it's the financial burden that you're leaving on all of your loved ones. So instead of them being able to properly mourn,
hmm,
they have to deal with immediately the financial stress of it, right? And it takes a toll on a lot of different people. Nobody wants to put a GoFundMe out, right?
yeah,
And what's most important though is, especially, and you mentioned a couple things of most people when they're traveling and they're passing away potentially later on in life, is
uh-huh,
they're potentially out of the country or they're out traveling. And you alluded it, even just from Houston to Austin, how much of an expense that was. But there are things
yeah,
out there that enable you, they'll fly the body free for you back to where you have to go, right? And again, with that, like certain packages and things like that, or have tinsing and software in place where you can just upload all of your important documents, have it all in one place. Or maybe you had a will or even a trust can be in that, so that if you couldn't make decisions for yourself later on in life, you have people that you've decided on who to make directives and healthcare decisions for yourself, right? When it comes
yeah.
to that. So it's all about all of those things that, again, a little proper planning can go such a long way to alleviate all that financial burden and properly set up your loved ones for when you do pass away.
Okay. This is juicy. This is juicy. This might be one of our last questions, but I do want you to go a little deeper into um, maybe the difference between a will and a trust, and then just talking about um, helping people have the mindset that they need. They need one or both.
Yeah.
No matter how much your estate is, no matter if you probably just have a car, who's the car left to?
Yeah.
And on up to having an actual estate. You have investments, you have businesses, you have things that need to be dispersed through the family. Or how do you want them to be dispersed through the family? Because one thing is, like, when family comes together over a death, people mourn differently, and so not everybody's in the right mindset, and people hurt differently, and so it becomes, when there's a bigger family that has to, you know there's nobody that is the one to make the decisions. A lot of stuff can go left and right. Does that make sense?
Oh, yeah.
I was lucky enough to be the only child, and everybody knew, like, I was making the decision. But some families don't have it like that.
Yeah. Yeah, Ernie, and that's a really big one too. Again, a little bit can go a long way to avoid all of that. And when it comes to, you mentioned everything about it already, the sticky situations that a lot of families have to find themselves in because of it. But between, like, typically when most people don't even have wills and trusts in place, right?
Mm-hmm.
And what happens is all of your money in the state is going to go to probate, and a judge is going to decide where your money is going to go and who it's going to go to. And on top of that, they're going to take around half of it because they had to deal with all that, right? They're going to get paid in order to division of assets, right? What if you had a will in place where you had directives of where you wanted everything to go, but most people don't know wills. Even if you have a will in place, it still goes through probate. But if you have
Wow.
a trust, it's the only thing that doesn't go through probate, a trust. And again, it's typically like a one-time trust, essentially a payment, and you do it. And then again, everything can go inside the trust, and
Mm-hmm.
it can dictate to whoever you want to go. There are also different types of trusts, but there are a lot of companies out there that enable you to have even just a free consultation to see what you could do, to see what you have in place. Maybe it's not to make a decision immediately, but you can also at least get the knowledge to where you can start to make plans to put that in place, because it really can go a long way. A lot of people just don't realize that everything that they own is still something that needs to go somewhere, right? Like, where does it go to? That it really is division of assets in that regard. People don't even realize it's just that they don't have a net worth when it comes to just actual monetary value. They have belongings, they have stuff, they have things everywhere that
Mm-hmm.
can actually be decided and divided amongst people. And it doesn't just And typically, last thing I'll mention is debt as well. Like most people pass on debt, liabilities, but they don't neglect. But like what if we do help? What we can do is just a few of those things in place to be able to pass on legacies.
How does that work if somebody has debt? Like in my case, my mom didn't have any debt, so I didn't have to deal with that. But if somebody does pass on debt to their does it go to the kids? Like, how does that actually work?
Yeah. So I can't speak on an expert essentially, but what typically happens is it doesn't just go away, right? When most people think it doesn't go away magically, but if they have assets and things like that can be utilized to pay things off, like life insurance and stuff. A lot of it can go to that. That's why it's included in someone's insurable need is debt, so that it can be wiped away. But those debt collectors are real, right? Like they will come, debt collectors and even creditors that need to come and get those assets. So really when it comes down to it, that money has to go somewhere, and typically it falls on the responsibility of people that really it's not their fault. They never co-signed to be able to do that, right? And so that happens a lot. I don't know exactly what happens, but it doesn't go away.
Yeah. Anything we haven't talked about that, any last kind of remarks on topics we've talked about today?
No, it was a great conversation, Ernie. Thank you for having me on. I really just feel that most people just are unaware of the different types of things that are out there. And then like I said, the educational side of it is just about getting the information. And then once you have it, you can make the decision to move forward once you understand the value of it and the different types of it, so that you can see it as more as an asset, as a tool, as something valuable to be able to use right throughout your life, and then still being able to set people up for life. Because the last thing I'll say too is, like, it's so trendy to say generational wealth, but Ernie, like, in your experience, do people really know about how to go about accomplishing it? No, right? So like I said, if you really truly believed in it and wanted to set people up for life after you, essentially, and also set you up for life to be able to, make your family better in the interim, in their lifetime, in your lifetime, a little proper planning can go a really, really long way.
Awesome. Well, let's leave the viewers with some actionable steps. So what would be, 1 to 3 steps if that they could do if they are maybe the first time hearing this type of information? They don't have anything in place, no life insurance or anything. Maybe with their business, not business, but their company. But what are some steps that people can start to take?
Yeah, the really, when it comes down to it, is people need access to the knowledge. And so I just wanted to share, like, even just next Tuesday, the 16th, we're hosting an athlete webinar. If you want to come learn a little bit more about exactly the foundational rules of money, knowing the rules of the money game. How can you win if you don't know the rules? And then also, like, being able to have ownership. How do you have ownership when it comes to business, when it comes to life, or owning your income? How are you able to have that? And so I would just recommend, it's a no obligation, like, free webinar to be able to do that, have access to that information. Some actionable steps on top of that's next Tuesday. But yeah, if you have any access, ask Ernie. But with that, the actionable steps are just getting that knowledge, and typically when you have the knowledge, like I said earlier, then you'll do better, honestly.
Gotcha. All right. So where can people find you on the Instagrams and, social platforms of the world?
Sure. Yeah, absolutely. Thank you. It's if not me, then who at if not me, then who. So yeah, if not me, then who, but if not, because obviously my name is Natalie, so love a good pun, but if not me, then who. If I'm not going to do it, then who's going to do it? Right. So a lot of people are waiting for people to come and save them. I realized that was me after my 20 years. I was like, oh my goodness, this is crazy, right? What am I going to do? So if not me, then who? Feel free to give me a shout or message me. We can I'd love to connect. I'm in Austin as well as with Ernie. Yep. So I appreciate that. Thanks for having me on today, Ernie. I really appreciate it. I appreciate you. This is the first one. We're going to get on here, more often and just talk to the people and give them the information that I wish I had when I was 21, leaving UT, going overseas, not knowing nothing. Even though I wasn't making a dime really, but
preparing for retirement, preparing for understanding my body is not going to last.
Right.
And just giving myself, like you said, more options, more information.
Mm-hmm.
And shoot, with the compound of interest, if you have time on your side when you're younger, so get this information and be execute like an athlete, right?
Right.
Execute how we do.
Right.
Put some action towards it and get it started.
Love it.
Yeah, man, this is it, you guys. Appreciate you, Natalie, for coming by. And as I always say, dude,
That's amazing.
we have to. Where did that come from? Okay, so quick, funny stories. Every time, huh?
I was just saying, how do we do that? Because I want
How
to
do we
do.
do it? I
Keep
don't
going.
know.
Doing great.
Every time I have a call with Natalie, right? And I'll end it and I'll be like, peace. That's my thing. Peace or whatever. Thumbs up. The balloons on Zoom, they just fall. And then today they did it again, but it was confetti. We haven't had confetti.
We
right?
have it. It's a good sign. It's a celebration.
This is good. All right, you guys. All right, Nat, thanks for coming. Appreciate you. We're going to be back. All right, people. See you when I see you. Peace.
Oh, man.
Oh, nothing again.
So good. I love it.
Done.
Take care.
Done.